Hello, everyone. Welcome back to the channel. Matt with Greenbar Trading. Welcome back to another weekly watch list video where we're going to go over everything you need to know for the week ahead. Before we get into it, please hit that thumbs up for the video. And if you are new, consider subscribing to the channel. So this is the first full week of earnings here. And we saw on Thursday and Friday, the bank earnings, they were really good. They blew past estimates, and JP Morgan was a huge standout. So in this coming week, we still have a lot of banks to report with some tech, right? We have Netflix, we have IBM, Lam Research. I'll throw in Tesla as far as tech goes. But, we just have to wait and see what these companies report. So last year, Q1 earnings season, that is when we started that free fall in the stock market. So we'll see. We'll have to wait. The market is pricing in pretty good earnings. So we'll just have to wait and see how the market trades. But this is the first full week of earnings from Monday through Friday. And then the following weeks, we're going to see all the big boys, the Microsofts, the Apples, the Googles, the Amazons, the Nvidias. So there's your earnings there for the week. Okay, now, so going over the sectors and how they performed on the week and how they're performing relative to each other. We saw the past week, energy again, leading the pack. You had financials, obviously what happened on Friday there. You can see here on a down day, financials led the way on Friday. So, technology for the week, kind of flattish. Real estate really not doing well at all. Looking at the 1 month, real estate is at the bottom. Energy is back at the top. On the 3 month, technology, communication services are absolutely destroying the game. All right, communication services, that's your Metas, your Googles, that type of thing. And they've been really doing well along with technology, while real estate has really gotten hit hard. All right, so that's your sectors there. Looking at the economic calendar for the week, the big thing that I have, other than all the Fed presidents speaking, is this Fed Beige Book. This is at 2 p.m. on Wednesday. It is a book of economic data compiled by all the Fed presidents and what they see for the economy in their districts. All right, so this is going to be a very important thing to look out for. We need to see how the economy is doing, right? Are we sinking into a recession? Are we slowing, just slowing down? And how did that affect each district? So we're going to see this week, there is a decent amount of economic data, especially the jobless claims here. You can see the estimate is for 244,000. This keeps rising. So I think what is starting to happen, we're going to see the jobs reports start to show unemployment going up. So we just have to wait and see. But a sure recessionary thing is if this jobless claims continues to rise and goes over 250,000 each week, that is showing the potential of a recession coming in. We've already seen, even last week, and I'll just go back, numbers showing the economy slowing down. PPI was huge on Thursday. Retail sales down a lot. So the economy is slowing. It's definitely slowing down, but how much will that really affect companies' earnings? Because that's what everything is based on. The whole stock market is based on those forward earnings for 2024. The SPY, which is what we all look at, that's the S&P 500. Right now, it's trading at a certain level with those forward earnings in mind. So if they start to, get the feeling that those earnings are going to have to come down, well, then the market's going to have to come down. So that's where we're at there. And I'll just show you guys here. I showed you in our last week's video the QQQ Top Holdings by percent. All right. Microsoft, Apple, Amazon, Nvidia, Google, Meta, and Tesla. They make up a huge part of the QQQ. And we've seen the Qs, which is the NASDAQ. This is just the ETF. We've seen the NASDAQ making highs for the year. And it's because of these stocks. And guess what? Their earnings are coming up. So a lot is baked into the market anticipating good earnings for these stocks. If they do not perform well or guidance isn't great, then the market could come down. And also, I do have to say, a lot of times, the big institutions, those big time money movers, they're the ones that move the market up and down. They like earnings season because that adds a lot of volume. So if they want to get out of positions, it's a very good time to take that profit for them with earnings season. A lot of volume, a lot of people to sell to. So keep that in mind as well. Okay, so coming over to the SPY, this is our compass. This is where we need to do our research for where the market might be going. The indicators I use, 20 EMA, 50-day moving average, and the 200-day moving average. This is the daily chart. So each one of these candlesticks, if you're new, each one of these candlesticks represents one full day of trading. So most recent, on Friday, that is your candlestick. This candlestick right here is a doji candlestick. So on Friday, you had a big range from 410 on SPY all the way up to 415 on SPY. And you closed right in the middle. So this is a candle of indecision, right? So we were consolidating, started a little breakout, and then kind of just stalled out a little bit. This is okay. The market is definitely making higher highs and higher lows. And if we look at this 20 EMA, and I'm just going to make this a little bit thicker so it stands out. This is making higher lows, right? And higher highs. And as it's making higher lows and higher highs, the market is making higher highs. So just looking at this daily chart, and if I just took away everything else that's in my mind about the potential for recession, slowdown of economy, earnings getting hurt, this would look to me like it wanted to go higher. And this is the S&P 500 making a new high for the year. That's what this would look like, seeing this 20 EMA making higher highs and higher lows here. Well, that higher high would be up here. All right. And if that did get up here, that means that the market is breaking through 420 and maybe hitting 430. So that's just what the market looks like to me right now. But there's very important things here to look at. We need to take a look at where that volume is. All right. So we're going to add our volume to the chart here. And I want to look at this on the weekly. So the last 3 years. This is the last 3 years of trading. Each candlestick represents a full week. So what do we see coming up? We see a big volume ledge right here. So from 422 down to where we stalled out at 415, there was a lot of volume taking place right here for the last 3 years. There was a lot of volume. So that might act as resistance. If it can get past 420, if it can break right here, which was the highs for this year, instead of hitting a double top and then pulling back, if it can break out, well, then you have some room here now to about 430 until we see that next volume ledge here. that can act as resistance. You see how there's a little pocket here? Well, it's easier to go through this pocket of lighter volume and then hitting resistance. So that's why I'm saying if we can break highs for the year on the SPY, then I would say 430 might be a target. All right. And that's just coming right back here to where we hit highs back in August of last year before the market pulled on back. All right. But like I said, we are headed into earnings season. Anything can happen at that point. We saw last earnings season here in April. Well, that took a huge leg down in the market. So we just have to see how the market reacts to earnings. One other thing I wanted to show you guys on the daily chart, and I'm just going to take this volume away now. So on the daily chart, if we look at this year here, I'm just going to move this. When we came back down, when price retraced back to this 380, you can see all this volume that took place here. This was key support. And what could have given you the hint that the market would be up where it is right now? Look at the volume right here. Look at all that volume that took place when the market pulled back drastically to this 380 level. Well, look at all those institutional investors that piled money in here. That's a very bullish sign. So this 380 is a huge level, a huge, huge level. You can see all that volume. A lot of bulls got in here and saw that next leg. But will they take profit? Will they start to take profit around the highs for the year? All right. So double bottoms, double tops, they can be very interesting spots to take trades. So I would watch this, especially with earnings season coming up. So that's the SPY. Going over to the Qs, which is something that I've been trading much more because I've found that the QQQ has been a huge mover, and it's really given a lot of opportunities to swing trade, to trade in the range. You can see right here, we've seen our demand zones, we've seen our supply zones, and they've held up pretty good. The only thing is, if you do trade this, I would wait to trade when it gets into that demand, when it gets into that overhead supply. And then taking your profit, don't hold it. All right. So if you do hold trades during this consolidation without taking profit either the next day or in 2 days from after you get in, if you're trading options, it's just going to kill your premium. That time decay, the theta on the options contracts will just get eaten up. So where we're sitting, I mean, we've seen that 320 as a clear level there of resistance on the Qs. We are currently in an uptrend still. We do have this trend line here that I would like to see us come back down to and see how it reacts around these moving averages. So if we do get earnings and we see a sell-off as earnings come out, even if earnings are good, maybe that pullback gets down to these moving averages or the trend line, and we can see if the market is for real or if this was just a Q1 type of move, because that is a very good move coming off of a very bad year. Fundamentals are still very expensive here on the NASDAQ stocks, especially those big mega cap stocks. The fundamentals are just not there. They're just way overpriced still, and they're carrying the market. So every stock, like I said, Microsoft, Apple, Amazon, Google, NVIDIA, they all look like this. They're all looking like they want to break out even higher. So that's the Qs. Looking at the Dow Jones, we did break out of this level here that we had on our charts, and then we're just right back to this. So, I mean, there's not much room here for the Dow. You're just coming right back into consolidation, which you'll see will act as resistance. It has all year. And that's where we're currently at for the Dow. Not seeing so much upside potential. The IWM here, well, we saw support at 170, and now we're kind of just consolidating here below the key moving averages. So we'll have to wait and see how those regional banks show up with their earnings. A lot of bad news is already baked in. So if the regional banks do well, a lot of them are in this. The IWM has a potential to break out. All right, so I want to take a look at the VIX here. You can see on Friday, look at that sell-off. Down to a 17 handle on the VIX. Just really, really low. Just matches up exactly with the low here for the year back in February. We'll see if we bounce. We're getting oversold. When it does do that, the tendency is to bounce back up. And if the VIX goes back up, that means that the market pulls back. But that's a really low VIX number. I mean, let's see, when was the last time we saw a number that low? Other than in February here, this one day that pushed through, you would have to go back, let's see, all the way to the beginning of 2022. That's how low we've gotten on the VIX. So when it does get that low, there's less fear in the market, there's more bulls, there's more of a chance of that opposite type of trade where the bulls get caught off guard, the market drops, the VIX goes up. All right, so look at this, JP Morgan, their earnings, look at that gap up. It gapped right up to the 50-day moving average and then took off. That is a really nice gap right past some really key moving averages. So it is getting to overbought. We'll see how it handles this mess right up here. We'll see if that acts as resistance on JP Morgan. But that's, I mean, this is the best bank to be in. They handled the financial crisis so well back in 2008. They handled what happened earlier this year so well. They're just a really well-run company. So it's JP Morgan. And like I said, Microsoft, all the way up here. What happened last earnings season? Came out with earnings, came down. Netflix, that was their massive drop here a year ago. And they've now climbed all the way back, closed that gap. Where will their earnings be? We'll have to wait and see. Meta, another one, dropped off earnings and has rebounded very nicely. Amazon, same thing, earnings season from Q1 a year ago, saw that massive pullback. So we'll have to wait and see what the earnings show up. Taking a look at Apple, same thing, Q1 earnings of last year. That was a good chance for a lot to take off profit. It sold off. It did come back. And then now we're at highs here for the year. Touching this trend line, I would definitely be looking to take Apple short. I just don't see how much upside is currently in Apple right now. It already had this huge monster move, up 32% on the year, up 32% going into earnings season. Usually that's a recipe for disaster, but we'll have to wait and see. Hope you guys enjoyed the video. Hit the thumbs up, and I'll see you back on the next one. Take care, guys.